Some Trades, and I'm back with just a quick video because I wanted to go over my trade reflection process, and I wanted to show you like what's the best way that you can actually go about and reflect your trades, and I wanted to share that process with you. I'm going to be sharing some key points about my trading journal and some important lessons that I had learned after reflecting. And as a beginner trader, this is how you should actually be reflecting, going over your trades so you can improve moving forward. So I'm just gonna start off by reading my journal. And I took 2 trades on Apple. One good trade and one bad trade. And the reason I said that it was one good trade and one bad trade is because I'm judging my trading based off of my execution and then my plans second. Execution is always the most important thing in your trading, and then your plans and your analysis should come second. Obviously, they're both important, but that's what I take priority over, my execution on my trading, and how I judge the market context and how I get confirmations and how I do all of those things to actually create an edge and take a trade based off of that edge. But my execution was bad for this trade because I didn't respect my stop loss. I had too large of a position size. Which is obviously the reason why I didn't respect my stop loss, because I was attached to the trade and the amount of money that I had in it. And most importantly, it wasn't in my pre-market plan. So I always talk about that, how you should only take trades that you have planned prior to the market opening. And this trade that I had taken, this trade on Apple, was not in my pre-market plan. I'm going to switch to the chart, and I'm actually going to show you the trade that I took, my entry, and where I went wrong, and obviously what I could do better in order to just not make the mistake and actually make money off of a setup like this. Okay, so I have a screenshot of the 2 Apple trades that I had taken. And the first one, obviously, you could see based off where the arrows are. This was the first trade that I took right here. I entered right here at this support. I was looking for a breakdown of the support to take puts down to this support right here. But the thing where I went wrong, okay, no, actually, let me start like this. So the reason I had entered these puts is because of the fact that I was watching ES and NQ and SPY and QQQ always on the side in order to gauge the market context, because the market obviously drives how the equities act. But what I had done is I had put too much emphasis on the actual market, and I used that to pretty much take a pretty bad entry on this trade, because this white line right here, that was a clearly identified pre-market support. It was a clearly identified support in the pre-market, and it was a clearly identified support on the 15-minute chart for the last 2 previous days. And I mean, for the most part, like, I'm gauging the buyers and the sellers, and I'm gauging how price is reacting to supply and demand and the supports and resistances. And when I had taken this trade, the markets were basically selling off from supply. And I was pretty much saying that I wanted to see this break down, because I'm watching the 5-minute chart, and we have this right here. It opened on the 5-minute. This 5-minute candle closed above the 175 key level that I identified. Then we had a doji up here, and it failed to move any higher. And then after that, we had a strong move coming right down afterwards, both with pretty much equal volume. And on the 1-minute chart, we had wide body candles the whole way down. Pretty much I was like, okay, I'm gonna take this trade once we get a break below the support, because the market is bearish, and it's obvious that the sellers are in control, because we took it all the way from this high all the way back down to low a day. Or what I did wrong is, because of the fact that this is a clearly identified support right here, and then we obviously already had one clear touch right here that provided a strong rally. And on top of that, this is the low of the day, right? The market was selling off of supply, but there wasn't high volume. And to be honest, I could say that the market was more balanced than anything. And when I say balanced, I mean that there's nobody's really in control. It's consolidating, moving kind of sideways, or just there's not one specific side that has a lot of strength. So we had a bounce right here, and at the support we had a second bounce, and then a third one right here. And this is the one where I entered, because we had this wide body candle, and it didn't close below the support. So what I should have done is I should have waited for this to come down, actually break the support, come back for a retest, so I can take a second, so I can take the subsequent move down afterwards. But I jumped the gun and I bought right here on this green candle at the support, which if I wasn't short biased, I would have taken that as okay, this is a good place to enter because it's at low a day. It's the second, or even you could count it as the third touch of support. So that's a triple bottom, which is a very bullish sign, and it's right at the support. So me taking puts right there was terrible. It was a terrible idea. Even though I had my confirmation, I had this 5 minute confirmation right here that I was looking for. This 5 minute confirmation, and then the sell down, the movement down, and on top of that, the way I had judged the market, I pretty much said it was confirming my idea too, which it wasn't. And oh yeah, and this wasn't in my pre-market plan, because I have a book. Pretty much, I call it my stock playbook. I think everybody should have one. And I write down all my plays for the morning, and that wasn't a play that I had written down. So it obviously wasn't the highest quality setup, and it would have been more high quality if I had said I wanted to go long at this support, but I didn't. I wanted to take it short. And for this to be a high quality setup, honestly, all I could have really done is just waited for it to come down and retest, cause my risk would have been way more defined and everything. And then, all right, moving forward, this right here, this pink line was my stop loss. This pink line right here was my stop loss, and I didn't follow it. So I entered right here, and I said that I'm going to exit if my stop loss triggers, and if it comes above this little pivot high right here. And I didn't. Obviously, I wasn't gonna exit on this one because it didn't close, and then this one didn't either. But once I saw this candle right here, I should have exited, but I didn't. I held on to it, and then once I saw this and this, I was like, oh, okay, I'm fine. But that's not how I should have went about it, because all that created was another final touch to give Apple and all the participants more than enough confidence to take this up higher to resistance. And obviously, I felt like an idiot because I'm trying to get filled all the way up here, and obviously my put contracts nobody's buying them. Who would buy them when there's this much momentum on a move up? So I took negative 20% on that trade. And then obviously my actual pre-market plan for Apple was to take this long above the 175 resistance. And once I saw that, okay, my puts were wrong. Obviously, it's stupid to be short biased. You had one confirmation right here, and then a rally. So that's more than enough for me to say, all right, I can be long, and Apple has the strength. If it rejects at this resistance, I'll get out below this pivot, which is honestly, that was a good stop loss. And I was right. The stock rallied, but the thing about this was because of the fact that I took that previous loss on Apple right here with those put contracts, I wanted to make up that entire loss in this next trade, and I shouldn't have done that, because you can see that Apple, when I moving back to the left side, Apple rejected right here on the 5 minute and on the 1 minute chart. You can't really see it, but behind here, you can see that Apple rejected at the 175.47 resistance, or even this white resistance, and I think that was pre-market high. I don't quite remember, but it rejected right there. So what I should have done, the proper thing to do, should have been to enter right here like I did, take the break, and then sell into strength once I got a break of this resistance, or this resistance, what should have been my target. But instead, I was waiting for 100% move so I can make up all my losses, my 20% loss from this. And a 20% loss is honestly okay, but it's the fact that I was oversized in my position. So I had too much of my account in that one trade. So it hurt me more than it should have. Because if I had gotten out right here on my stop loss with my entry right here, my actual loss on the trade would have only been 5%. And I held that bag all the way until up here. For what reason? It was just foolishness. And that's not something that any trader should be doing. And again, so I entered right here, and once I got the rally that I wanted, and it was a good trade right here because this trade was in my pre-market plan. This is what I was looking for. I bought right here, and then it came up to my target for a scalp, but because I came in this trade with the wrong attitude after losing a previous trade, I didn't execute the way I should have. So I didn't get out. I was up here for 15% profit on this little move right here. This little move. And it came back down. It broke below 175, and it was starting to look like it was gonna break below my stop. So once I did that, once I saw that, I exited, and I exited before it even hit my stop loss for a -4. Oh wait, I'm not even doing that right. I exited for a -4% stop loss. For a -4% loss. And I could have walked away with a 15% profit right up here, but I didn't, just because of the fact that I let this trade and how it went affect my mentality going into this trade. And, as a trader, that's something you should never do. That's something you should never do because each trade is its own individual trading. You shouldn't let the past outcome of the trade affect how you're going to let this outcome happen. The only thing that you should do is learn from your mistakes. And in the moment I wasn't doing that. But reflecting, I did, and I see that, and I've already improved moving forward. But I figured it was just important to share for all traders that have been just getting started and have been struggling with this, holding onto their bags, or just taking trades in the wrong places. So those are the two trades that I took, and that's kind of how my journals go. And yeah, so that's it for the video. Thanks for watching, and I'll see you guys in the next one.